Welcome in new season of our podcast Financial Thoughts. Again in English because today we got a special guest, Ido Baum. He's an associate professor of law at the College of Management Academic Studies, where he teaches at the Faculty of Law, and he is the legal commentator, the Market Harrods.
Hello, nice to be here.
And also our second guest is Jarek Bełdowski from Warsaw School of Economics.
But you know me.
Yeah, you probably know him very well from our previous episodes.
But we are happy that we have Ido with us today.
Yeah, and I'm Hubert Wejman, the chairman of Polish Institute of Economics Thoughts. So today we got a very serious topic. We will talk about financial crimes. Yeah, it sounds very serious, especially the insider trading. But we also got another categories of financial crimes.
So let's put it very straight. We will
Yeah.
not teach anyone to commit any financial
Yeah.
crime.
We'll talk only about those financial crimes, how they affect the economy, how they affect average citizen and average investor. Yeah. So to be on the same page, how would you define the financial crime? Yeah, because we got like this insider trading. Yeah, so many people recognize financial crimes as insider trading, but probably we got more types of financial crimes. So maybe Ido.
So maybe we can say very broadly that when you talk about financial crimes or the kind of financial crimes that we'll talk about here is situations of fraud where you have two parties in the financial sector or in the stock market, but one party is actually knows more and uses this additional knowledge to either manipulate the market or manipulate a specific trade in the market so that you think that you're buying stock in a company or selling stock in a company in a fair and free market, but it's actually not this kind of situation. In the world of securities regulation, the world of financial markets, the two major kind of crimes that are of concern and that are really evolving now because the world is changing from a technological perspective are insider trading and market manipulation of prices. So you can't trust, or maybe you can't trust the prices anymore, and the reason is not because the markets are imperfect, but because someone is tweaking the numbers, right?
Okay, it sounds very scary, but what I wanted to add, Ido, is that in this Financial Thoughts podcast, we try to touch upon a bit law and economics. And because Hubert mentioned insider trading, I think we really need to dig a bit into the history of law and economics because we have founding fathers. And to the surprise of many people, one of them was in favor, let's say in quotes, yes, in favor of insider trading. That's the one who is not well known because he was always behind the curtain. And that's Henry Manne, the person who actually implemented law and economics into America because he conducted every year a very prestigious seminar where he was inviting the judges. And those judges learn how to use economics into the adjudication.
Right.
And what Henry Manne, I think, let's be clear with this, okay? Because I think he's too much accused. Henry Manne was not in favor of insider trading. What he said is that it's better to make the constraints of insider trading within the private contract instead of having a public crime, which is called insider trading. So what he was saying is, okay, if you are the owner of the company and then the employee is using the information to get something in addition because nobody except a very limited number of people had the access to this information, so he could exploit the changes of the price. Then he said, because the state fails to chase those people, it's better to have a private contract between the owner and the employees, or it could be illicit contract, that not one written, but one which exists really. and then it's better to utilize this contract to, get rid of the profits of the person instead of going with the insider trading.
Right.
Correct?
Yes. Well, Henry Manne, you have to give him the credit for being an academic entrepreneur, because he really changed the judicial system in the United States and actually in other countries in his seminars on law and economics, training judges to think about the law in economic ways. And he did have a position on insider trading that was actually not accepted by in the majority of the law, at least in the United States, and not in Europe as well. I mean, Europe eventually also adopted concepts of insider trading and sees it as a criminal violation. But the term insider trading, if we go into law and economics understanding of insider trading, basically talks about access to information, right? If you have access to information about something that's going to happen in the company, and you're an insider, right?
Well, not even in company, even in the country, because, well, in the era of new technologies, we got those predictive markets like Polymarket, yeah, when you can bet about the political events, yeah, and you get you some insight.
But this is really interesting, and if we have time, let's talk about Polymarket for a minute, because the definition of insider trading is if you know something about the corporation from inside the corporation, and you are either an insider or you're in contact with an insider. For example, Jörg knows something about the bank because he works in the bank, and I talk to him, and then I have information and I use it, and I know that it came from the bank. And if I sell shares and you buy shares, and I have this access to information, then this is unfair, and would be considered something that changes the market unfairly, and so it becomes a criminal offense. Now, here are two ways to bypass. We said we don't give advice, right? This is not legal. Don't do this at home, right? But here are two ways to bypass this law, right? One possibility is when Jörg does not give me information, but not all legal systems work this way. But before you want to break the law in the ways that I'm suggesting now, consult a lawyer. Okay.
No. Don't do it. Don't consult a lawyer. But we are not inducing it.
For example, if I go for a swim or a run with Jörg every day, and we are friends, and he says, today I have a very stressful day at work. And the next day he says, I think everything is solved. Today I'm happy and we can jog for long, right? And I realize that something good is happening in his work, right?
So probably
this is not inside information.
Yeah, but it's like some kind of signal.
Exactly. It's a signal, but it's not access to information. And in some places, this is actually, if I go immediately and buy shares in the bank, this might not be a violation. I don't know about local law here.
Well, fortunately, the bank I work for
is not rated.
as well as, please remember that I'm a regular academic, Warsaw School of Economics. Unfortunately, it's not listed on the stock exchange, so it's in the hands
the private. Yes.
In this sense, yes, it is.
Yes. And then the other way is, what if you have access to very small pieces of information that do not move the market? If you look at the definition of insider trading in European law, and usually also in the state laws, and also in the United States and other countries, then you need access to information that moves the market, that moves the prices, to significant information. In legal terms, it's called material information. And one way of bypassing this is collecting very small pieces of information. For example, if you think about a company that's developing medication, and it has trials, right? So you don't know if the medication is going to be successful and then will be marketed. The way pharmaceutical companies work is that they enlist a lot of doctors, and these doctors give the medication, and sometimes they give placebo medication, sometimes they give the real medication. But each doctor doesn't know whether the experiment is going to work or not. But if you invest effort, right, here's the economic part, in going to a lot of doctors and asking them, how are your patients, those that are using this medication? And you ask 20 doctors, and 19 out of the 20 says, this is going very well. My patients are feeling better. Then you realize, this pharmaceutical company is going to be very successful. And then you buy the shares. You have inside information, right? That it was a lot of pieces of information collected and you put them together. So this is a combination of access, but also a lot of work. And that is actually considered legitimate. This would not be a violation of the law, at least in the United States.
It's require a lot of effort from you.
Exactly.
Yeah, it's not like a simple information that is give you straight signal, buy or sell the stocks. You need to put some efforts, you know, how to link those informations, those dots.
But here's the challenge. In the age that we are in, AI is a way of analyzing a lot of information, right? The whole point of AI is that you are able to analyze a lot of data points that in the past would require a lot of effort. And so it turns the issue of access to information to situations where you might need a little bit of access, but a lot of computing power. And this is a challenge because if you have little access and a lot of computing power that gives you an advantage, then you might be, you might have an advantage over the market. And so players that have access to a lot of computing ability could outmaneuver financial markets. And this is something, the issue with AI is it's flying so fast. We don't have time to regulate it yet.
So let's be clear, because I think we are talking about two types of crimes, financial crimes. One is manipulation, and one is insider trading. Insider trading is one when you get the inside information and you bet whether the stock will go up or will go down, and then you pocket the difference, and that's how you make the money,
Right.
profit. With manipulation, I think this is what you imply with AI, yes? That means if someone has a lot of computing power, and then it may make those small moves, which are not visible really, yes, in the beginning, then it can actually manipulate the price, correct?
Yes. And in manipulation, we have a much larger world, actually,
Sure.
of potential crimes. And it comes to your point about polymarket.
Mhm.
Polymarket is actually
It's based, how someone bets. So, for example, if many people bet about the event, the price
right.
rise. Yeah.
So for those who have not tried polymarket yet, it's kind of a market where you can make contracts, betting contracts, right, on anything in the world. Who will win Polish elections? Who will?
By the way, there was a big scandal in Israel because the soldiers who were very close to the information about military actions, they bet that something will happen, and it happened, and they pocket
Exactly.
money.
In June,
It was the same with
Maduro.
Yeah,
with Maduro. There are several cases now that are coming up where people had, like you said, inside information, but this is not stock market
It's not.
inside information. So it doesn't fall within the ambit of criminal financial violations, but people had information about. It was the Israeli attack on Iran in June 25, about the American attack that caught the President Maduro, right?
Venezuela.
And it happened in several other cases, including some very famous ones, like when is the famous U.S. Singer Taylor Swift, if anyone knows, when is she going to be engaged?
Mhm.
This was an issue of betting. The bets are always based on time. So will she is engaged to a very famous US football star. And the question was, will he ask the question in this summer? And it was published, but it turns out that they actually published the engagement 2 weeks after the engagement happened. And everyone in the family knew, but someone bet on the engagement of Taylor Swift, huge bets, and he knew exactly when the announcement will be. So this is inside information in a market that is actually not regulated. And there are thoughts now that these markets should be regulated. The case in Israel was that the soldiers were actually arrested, because they violated security laws. You know, they bet with information that they had from the army, which was a very sensitive security information. But imagine the situation if someone has the power, AI power, to manipulate information about a company, right? The Russians have done that. The Russians have set up 200 fake news websites to feed AI information that they wanted, you know, to change the scheme so that you get different answers in AI. You could do the same things about companies and then move the shares and then buy them or sell them depending on your position. So also issues of market manipulation violations are, you know, are changing now with the advancement of AI.
There must be conclusion, Ido, how to live with this and how to regulate this.
And why do you even need to regulate it? How it affect like every citizen? Yeah, because like from a perspective of every citizen, he think, okay, it's like a business world, so it doesn't affect me. Yeah, so why should I care?
Why should we care?
Well, there is always the quest for the truth. Yes, correct. So those 200 websites, if they are manipulating information, they are not giving us what we want. That means we want to trust the market somehow. Yes.
And our pensions are there.
Yes.
And our investments are there.
So you're trying to say, you know, I can. It's a bit of telepathy with Ido. You know. So he's saying public good. You know.
Yes.
He's using the term, not revealing what it means.
Well, I'm just saying, in many places and in many countries, our investments, our long-term investments, our pension funds, our insurance money is actually invested in these markets in one way or another. And we need to trust these markets. If we don't trust them, then we put it like our, well, my grandparents, they used to save the money right under the bed.
So we then change the stock market into casino somehow.
Exactly. And in the casino where you don't know who wins because you don't trust the owner.
Yeah. So it moves like the whole market close to the gambling, not like some kind of prediction.
Apart from Hollywood movies, I think always one person wins in the casino. It's the owner of the casino. That's
Yes, the house always wins.
Yeah. So thank you very much for this conversation. Thank you for your attention and see you in the next episodes.